due to COVID-19, we're doing a digital budget breakfast briefing this year. And my name is John Gagan. I'm the president of Mullingar Chamber in the town of Mullingar here in the Midlands. Mullingar Chamber has 140 members, which involved in all sectors of the economy. And Mullingar Chamber seeks to represent them as best as we can in terms of business and promotion for the town of Mullingar. This morning's budget breakfast is sponsored by AIB very kindly, and the presentation will be led from here by Miles Gillespie and AIB, who'll talk through a number of initiatives AIB have and loan facilities that business and people might want to be aware of in the current economic environment. And from there then we'll pass across to Stephens Cooke, where John O'Connell, Catherine Heduan and Joe and Jerry Cook will take it from there and talk us through what actually happened in the budget yesterday. Then we'll have a questions and answer session, which will be handled through a chat room. So if you look at the middle of your Zoom meeting, you can see the Q&A where you can type in a question and the various parties it's directed to will answer it. And then we'll have some closing comments. Hopefully we'll be done at 11 o'clock this morning. And thanks again for dialing in, and we hope you enjoyed this morning.
Thanks, John. I'll take it from here. And just want to run with a few slides. Good morning, everybody. My name is Miles Gillespie. I'm the branch manager in AIB in Mullingar. AIB is once again delighted to sponsor the budget brief for 2021. I would like to compliment President John and his team for organising this event today, given the current restrictions due to COVID-19. Just on the next slide, AIB continues to support our customers and our communities throughout the pandemic, with branches remaining open for business. I would like to thank our customers in Mullingar for their cooperation and understanding as we operate in these strange and restrictive times. To support our communities, AIB has committed 2.4 million to Trinity College Dublin to aid COVID-19 research. AIB has donated 450 laptops to Desh schools. AIB and its staff have raised over 390,000 for our 5 chosen charities, which include Pieta House, Food Cloud, and Alone and Soar. AIB has sanctioned over 3,300 new business loans. On our next slide, AIB has granted over 17,000 business loan payment breaks over the last 6 months. While this option may now be closed, you can still talk to us about your options that are open to you. We have a dedicated phone line open to deal with these inquiries. AIB working capital solutions include overdraft, business credit lines, and prompt pay. If your business has been impacted by COVID, please talk to us. And can I just please draw your, please do not forget about Brexit. If your business exports goods to the UK or through the UK, you need to talk to us. On our next slide, AIB has partnered with government bodies, including the SBCI, to bring state support to our business customers. This includes COVID-19 Credit Guarantee Scheme, which I'll talk a little bit later. Our Future Growth Loan Scheme, which is a long-term investment open to SME and agri customers over a 7 to 10 year period. And a COVID-19 Working Capital Facility, which is a 1 to 3 year term. On our next slide, you'll see more details in relation to our COVID-19 Credit Guarantee Scheme. This is open to any viable micro SME, small mid-cap, include primary, producer, enterprise and clubs and organisations established in Ireland. The borrower must declare to the bank that on the 31st of December that is a viable business and was not in financial difficulty, that the business can return to viability in the future, and the turnover potential and or profit has been reduced or impacted by 15% due to COVID-19. AIB has an online application process and is available through www.aib.ie, where the SBCI lending scheme inquiries forms are available. And just in relation to the purpose of this facility, it is a working capital, which includes liquidity needs or investment loans. Refinancing is available for COVID-19 related expense, and that were initially funded through short-term facilities such as overdrafts. The facilities are available from 10,000 up to 1 million. The term of the facility is between 1 year and a maximum of 5.5 years. The interest rate up to 250,000 is 2.75%, and over 250,000 it is up to 2.75%. There is no security required for amounts up to 250,000, but security may be required for amounts in excess of this. Just to note, there is a premium payable to the Department of Business, Enterprise, Innovation as a contribution to the cost of the scheme. This fee is based on the category of the business and duration of the facility. And just on our next slide, just given a number of details where AIB, if you wanted to contact for further information, or AIB.ie SBCI facility, we have a dedicated SBCI team. That's the government SBCI gov.ie. Just if you're looking for information on it, please talk to us in a local branch, dedicated phone lines, or speak to our direct team. And just on our last slide, I just want to say thank you for your time this morning. I know that COVID-19 has brought many challenges to every business in Mullingar. However, we must remain confident, optimistic, and work together. These times will pass, and while our resolve is being severely tested, the future will be brighter. Should you have any questions, please do not hesitate to contact myself or my colleagues, Martina Kennedy, Celine Pryor, or Tomás O'Rourke. I would like to thank you for your time this morning. I would like to thank Jerry Cook, John, Catherine and Joe of Stephens Cooke Associates for preparing the budget brief for us this morning. And I'd like now to hand you over to Jerry and his team. Thank you very much. Thank you.
Thanks, Miles. Good morning, everybody, and my name is John O'Connell, and this is Catherine Heduan from Stephens Cooke Associates. Ordinarily, we would all be meeting in the Gravel Arms at this stage, actually long gone at this stage, because we would be there an awful lot earlier. But such as the times that we're in, we now have Zoom has been introduced to nearly everyone's life at this stage, and between Zoom, Google Meet, Teams, and they're the priority ones at the moment. It seems that this is a method of communication that has been introduced in the past, never really took effect, but because of all of COVID and everything like that, that it is now going to be here, and as talking to Jerry before, it's going to be here to stay. So I looked at the agenda that was there, and I seen that we were supposed to be here until 11 o'clock, and if everyone was looking at the budget there yesterday, you'll see that the term unprecedented has been used, but of the 17.75 billion budget that was actually in place, 17 billion of that was in relation to expenditure, or over 17 billion was in relation to expenditure, and the other element of roughly about 200 million was in relation to tax measures. So, such as it is, we have, within the actual range of taxes, you have all the various headings there, and some of them are starting to get more priority. We have income tax, capital taxes, VAT, stamp duty, corporation tax duties, and environmental taxes, which is one area that seems to be getting more and more prevalence in relation to carbon tax as time goes on, and probably influence of the Green Party as well. Within the whole area of expenditure, primarily it is in relation to funding for public bodies and put some level of COVID and Brexit finance measures in place, because we're still in the whole level of uncertainty between COVID. The government has framed the actual budget on the basis that we don't have a vaccine in place, so we're still left with the uncertainty of COVID, and then also within the framework of a no-deal Brexit by the end of this year. And Brexit has been taking a back seat for the most part in recent months, obviously with the whole imminent threat and issues that are arising out of COVID, and in companies being under severe financial difficulty within the whole COVID period, being not able to trade, not able to operate properly, and where they do trade, they're trading at a fraction of what they should have been at, with additional staff being pumped into it. Just in relation to income tax, there has been no changes in relation to tax rates of 20% and 40%. In relation to the standard rate cut-off, which is the element that you pay at the lower rate tax before going into the 40% rate, there's been no change on those rates at all announced in the budget. In relation to USC, there's effectively been no change in relation to USC. The tinkering in relation to the thresholds that's there for the 2% is purely to take account of minimum wage rate increase that's effective from January 2021. So within the whole income tax and USC range, there's effectively been no changes in relation to it at all. In relation to the reliefs, again, no changes to the standard reliefs that are in place in terms of single person married tax credit and so on. The only thing that they have done in relation to a prior commitment was the earned income tax credit, where self-employed individuals were not entitled to the PAY tax credit of $1,650. And it was seen as very unfair when this was actually introduced. And the government committed to having self-employed people having the same tax credit as PAY workers within a framework of a number of years. They've now brought that up to the same level of the PAY tax credit of $1,650. One element that they have done in relation to that is that they've not only ordinarily the budget that takes effect now is effective from January 2021, but in the case of the earned income tax credit, they've retrospectively applied that to the tax year 2020. So in filing your tax return for this year, you will have a tax credit of $1,650 available to you, whereas you would have had up until yesterday a tax credit available of $1,500. The other element was the dependent relative tax credit, which just increased from €70 to €245, where you have a dependent relative that you're looking after. Other measures that was brought in is in relation to an enhancement of the Help to Buy scheme that was brought in July stimulus there of this year, where under the Help to Buy scheme, people can get a tax rebate of up to 10% of the purchase price of a house. That was announced, it was 5% and is now enhanced to 10% of the purchase price of the house. And also the maximum claim you can claim is historically $20,000. It's now increased to $30,000, or the total income tax paid in the last 4 years. Another element that's been in place is, and this already had been in place in relation to remote working. If you were remote working, you had employees that were remote working, you were entitled to pay them a daily subsistence rate of €3.20 to take account of the fact that they're utilising their own light and heat, their home office effectively, and they're utilising all the costs of that. But it was a tax-free entitlement. It's not a whole lot, but it was still worth €64 in the month or thereabouts. Now the government has introduced that where people had to work from home and they weren't given the actual subsidy there, or the $3.20 a day, that they can make a claim in their tax return for vouched expense claims where the employer doesn't make a contribution towards them, and that it now is open to including broadband expenses. So that's taking account of the reality that's there today, that in as much as possible, people are encouraged to work from home where they can do so, and it's to encourage that on a more and more of a basis. We've had a number of clients there that in some cases, in one case at least, they determined that arising from the COVID, they have to have everyone working from home. They didn't lose much productivity arising from that now, such as nature of the business that they have, a software development business, and they determined that it's even easier to manage with the systems they had in place, and they're going to be looking at a situation of people working from home within an actual team structure in the future. Within PRSI, again, there's only a slight change to take account of the increase in the weekly rate due to the fact of the increase on the minimum wage levels. Within the whole area of farmers taxation, There was a number of reliefs extended that were already in place, which is the farm consolidation relief. And that is where you sell one part of land in order and acquire another part of land as part of bringing your farm together. You can get a reduced rate of stamp duty from 7.5% reduced down to 1% on a valid claim. That's now extended from the end of this year to the end of 2022. And this is in the whole area of trying to make a business model out of the overall farming arrangement. And going on from that, in relation to consanguinity relief, that is to try and encourage farmers, the older generation farmers, to pass their land on to the next generation, whether it be their children or other blood relatives that qualify. And the stamp duty rate that was increased in recent years, right up to, in relation to commercial property, 2% up to 6%, then to 7.5%. It's a fairly significant cost. And in relation to planning and passing on farms and that, it's effectively a prohibitive cost in a lot of cases. So this is to take account of that and to help that process along. The other element that seems to be getting addressed in the last number of years and has increased over the last number of years is an increase in what's called the flat rate farmer edition. And what this is, the farmer sells stock in the mart. They sell it for €100, but anyone that's buying from them, they will get a credit of the VAT element. If they're in a vatable transaction, such as a meat factory and so on, they can claim back the VAT in relation to it. So it encourages them to do more business because the actual goods they're buying is cheaper to them in the long run. Just in relation to capital taxes and capital gains tax, effectively there was no change within this except in relation to entrepreneurial relief. And the reliefs that are still in place there, they're still worth mentioning in terms of that you consider them if you're thinking of selling. Typically it's businesses. There in terms of retirement relief, entrepreneurial relief, the change that was made in relation to entrepreneurial relief, whereas you have to own the shares in the business in 3 of the last 5 years, 3 continuous years in the last 5 years, they've now removed the 5-year element from that. In relation to capital acquisitions tax or inheritance tax, the tax rate remains at 33% and the thresholds haven't changed at all. The thresholds in relation to parent to child, which is Group A, it still stands at 335,000, Group B then, and Group C. But again, there is other reliefs there that are available. They remain in place, and the effect of those reliefs can, in some cases where it qualifies, reduce the taxable value down by 90%. So where you're receiving a gift and the value of that gift is €1 million, whether it be farm of land or something like that, that you can effectively have a taxable gain there of 100,000, and in the case of a parent to child, you're below the threshold there, 335,000 then. So you will have no inheritance tax in that case. The other main area as part of the overall stimulus for the hospitality and entertainment sector is in relation to VAT. So as part of the overall initiatives, the government brought in prior to this a standard rate VAT reduction from 23% to 21%. They brought it in for 6 months up to the end of February 2021, and there's been no change on that, so it will revert back to 23% thereafter. The reduced rate remains at 13.5%. However, the rate of 9% that was restricted to a small number of businesses has now been re-extended. This used to include these areas up until, I think it was the end of last year or so, that hairdressing, tourism, hospitality, restaurants, all of them that would ordinarily be subject to VAT at 13.5%, they are now going back to being subject to VAT at 9%. So it's just to stimulate that overall part of the economy when things are back up and running and you're able to go out into the tourism area and so on. Now that is effective now as it stands at the moment up until the end of 2021. This was an initiative that was introduced a number of years back, and it was supposed to be finished the end of the following year, and then it was extended and extended and extended. So this is currently in place, is extended to the end of 2021, but with the whole level of uncertainty here, this is effectively a holding budget. It's an assistance budget. This is part of the assistance measures, and it will be reviewed again by the end of next year. In relation to stamp duty, the Residential Development Refund Scheme has been extended to the end of 2022. And what this is, as I said, the stamp duty of 7.5% is quite expensive in the overall process. And where you buy a commercial site and then subsequently develop it for residential development, building houses, you can get a rebate to have an effective rate on the stamp duty there of 2%. So you get a rebate in the case of if you paid 7.5%, you get a rebate there of 5.5%. Now I'm going to hand over to Catherine in relation to corporation tax, and she'll take you on from there. So thank you very much.
Okay. So just in relation to corporation tax, there was no changes in the corporation tax rate of 12.5%. They've indicated that they're going to continue with that rate of tax. There was a couple of extensions in relation to reliefs for various items in under corporation tax. The first of these is energy efficient equipment. So accelerated capital allowances are available on those up until the end of 2023. So you can claim 100% of the capital allowance in the year of acquisition of specific energy efficient equipment. The knowledge development box is in relation to income generated from specific patents, royalties, that kind of thing. So that is extended from the end of 2020 until the end of 2022. And the effect of this relief is that it makes the income from those assets taxable at 6.25% instead of the rate of 12.5%. So the enhanced film tax credit is extended until the end of 2021, and it will be tapered thereafter. And then a change in this, so on the disposal of intangible assets, there was no balancing allowance or balancing charge, so there was no tax implications on this. They've changed this, and any assets acquired after the 14th of October 2020 will be subject to a balancing allowance charge. So there may be a tax implication on the disposal of specific intangible assets. So duties, the excise duty came into effect from midnight last night. So a packet of 20 cigarettes is increased by 50 cents, and it's increased pro rata relative to other tobacco products. And there was no major change, change at all on excise duty on alcohol products. There was, and this had been flagged, I suppose, before the Minister of Finance's speech yesterday, that there was changes to the carbon tax due, and it has been flagged for the last couple of years. So the plan is to include an annual increase over the next 10 years. So the current charge of €26 per tonne is going to be increased to €100 per tonne over the next 10 years, and it's at a rate of about €7.50 per tonne per annum until 2030. So this came into effect on all auto fuels from midnight last night, and all other fuels, including home heating fuel, from May 2021. Again, there was changes flagged in relation to the VRT, which is part of the government's climate action commitments, and it just aims to incentivise motorised to move away from higher polluting vehicles. So the reforms have been introduced in the context of the transition to the worldwide harmonised light vehicle testing procedure from January 2021. So it is saying that there is existing bans for VRT, there's 7 bans in that, and the rate of VRT goes from 14% up to 34%. The new VRT procedure will have 20 bans, which start at 7% and increase to 37% is the highest rate. So the lowest category will be for VRT was 14%, and now that's been cut to 7%. And the highest category was 34%, and that is increasing to 37%. The nitrogen oxide ban changes have increased, and it has the effect of increasing the charge for the higher polluting cars. The VRT relief, which was available for electric vehicles, that there was no VRT charged on those, is still in place, and it's for vehicles that are valued up to €50,000. But VRT relief for the hybrid cars is not extended beyond 2020, and I think that had been flagged in last year's budget also. So there was a number of revenue COVID relief measures put in place. I suppose as a result of the times we're in, there is debt warehousing. They've extended the relief of this. So this was 0% interest on tax liabilities that arose during the COVID period and for 2 months after a business opens. So these can be left unpaid for a period of 12 months and no interest will apply to them. After the period of 12 months has expired, a 3% interest rate will apply, which is a reduction from approximately 8% that would have been in place prior to COVID. So they're saying income tax for 2019 and preliminary tax for 2020 can be included in this scheme, and subject to certain conditions, one of which they've flagged is that if your income for 2021 is 25% down on your income for 2019, next year's income tax, so income tax 2020 and preliminary tax 2021, can also be included in the warehousing scheme. Under the temporary wage subsidy scheme, when this was initially introduced, revenue were given a flat rate of €410 per employee, so it resulted in a number of excess payments, and these were due to be repaid to them. They said, revenue said they were going to do a reconciliation report at some point in October, November time, but any excess claims on this temporary wage subsidy can also be included in the debt warehousing scheme. So then there was a new COVID restriction support scheme, which was flagged in yesterday's budget, and it is qualifying businesses that can apply to revenue for a cash payment. There are obviously a number of conditions to this relief, and some of them haven't been fully announced, or the full details of same haven't been announced, but the main points of it is that it's calculated on 10% of the first million of turnover and 5% thereafter in order to calculate what the cash payment will be. It's based on 2019 for your turnover, and the maximum monthly payment will be €5,000. They are saying that one of the things announced in the speech was that it had to be your turnover for the effective period had to be 20% or less of the turnover for the equivalent period in 2019. We're not quite sure what the equivalent period is, if it's done on a monthly basis, a quarterly basis, but those details I'm sure will be announced. It is open from today, so the details will have to come out in the next few days anyway. So it only applies to affected businesses operating where level 3 or higher restrictions apply. Other measures as a result of Brexit and COVID, so the EWSS, the Employment Wage Subsidy Scheme, is to continue to March 2021, and then a similar scheme will take over after March and will be in place until to the end of 2021. We don't know what details of those scheme is at this point in time. I presume it will be announced closer to March 2021 when the current scheme is due to end. The Enterprise Support Grant, which was available for self-employed individuals who were not subject to commercial rates, has been extended into 2021, and this gave a grant of up to €1,000 for relevant expenditure from your local enterprise board. There's a super fund to be made available of €4 billion to €5 billion, and this is to cover Brexit and COVID expenditure. And then the final one for businesses, so the commercial rates holidays is to be extended to the end of 2020, so it's the Q4 of this current year. There won't be any rates payable in that period. Moving on to the social welfare, there was small changes made to these. So the planned increase of the pension age to the age of 67 has been deferred. We don't know when it has been deferred to, it's just been deferred at this point in time. There's a €5 increase on the living alone allowance in 2021 and a €350 increase in fuel allowance for 2021. Then there's, for the qualifying child allowance, there's some increases in those, so €5 per child over the age of 12 and €2 increase for children under the 12 years of age. And the care support grant has increased from 1,700 to 1,850, and this is due to come into effect in June 2021. And then final one for SUSI grant for postgraduate students has increased to €3,500. Parents' benefit will be extended by 3 weeks to 5 weeks in 2021. So this allows a parent to take 5 weeks paid leave from their work at any time during the first year of the child's life. The Christmas bonus will be paid for all social welfare recipients and most PUC recipients. There was a 15-month time period on this, and this has been reduced to 4 months in relation to the PUC recipients. And then finally, I suppose self-employed individuals can take up intermittent work without losing their PUC through an earnings disregard system. And the details on this at this point in time is that they can earn up to €480 gross per month without losing any of their entitlement to their PUC payments. So they can earn casual work, I suppose, or on regular work. And then the summary points. So no change really to income tax or standard rate bands. Minor changes to the USC thresholds just to take account of the increase in the minimum wage. The earned income tax credit is to increase to $1,650 for both 2020 and 2021. The dependent relative tax credit increased to €245. Commitment to the current corporation tax rates. No real changes in CGT or CAT. I suppose the biggest VAT change, the reduction in the VAT rate from 13.5% to 9% for hospitality and tourism. Excise duties increase on tobacco products, and BRT migrating to the WLTP, which will have changes on charges for that and for motor tax. Carbon tax commitments for the next 10 years, so it's going to increase by approximately €7.50 per tonne for the next 10 years. And then Brexit and COVID finance measures introduced, and a small increase in some social welfare payments. And that's the end of our presentation. Thanks very much.
Like we said at the start, there wasn't a whole lot in relation to the tax measures that was there. The majority of the budget of 17.75 billion was allocated in relation to expenditure for the various government departments and so on. So when, as I said, we've seen the schedule there, and it's supposed to be for an hour. At the end of the start, it'll be no more than 30 minutes in relation to the tax element in any case. So I don't know, has there been any questions submitted at this stage, or if there is any questions in relation to the presentation or the budget, or just in general in relation to scenarios?
I'm just looking in here, John, and there's no kind of any questions yet. No, we don't seem to have any questions.
Well, it means that nobody was listening, or it was so good that everyone has all the answers.
That could be it too. We're going to send out the slides separately to anyone who registered to attend, so you can go through them in your own time. But if anyone has any questions, the chat function is open there now. I suppose one question I had was, like, it looks like a fairly balanced approach to the situation we're in at the minute. They didn't touch capital gains tax. Do you think they're holding on that as for next year, or is there any view on CGT?
The whole thing about the area of CGT, at least now it's a little bit more stable in the government. They couldn't necessarily be seen to impact anything in relation to taxes because of the level of uncertainty and because they'd be challenged on it. The whole area of CGT is seen as a rich tax, and any changes to it is going to be attacked on that basis. Now, it has been proven in the past that where to reduce the level of, say, the CGT rate that it created more and more activities, or activity in the economy, and they actually got a better return on it. There was hope that they'd be reducing down the CGT rate from at least 33% to 30%. But I think with the amount of expenditure that was coming in place, it was going to be very hard to make any changes in relation to a tax base, because they're going to need that when it gets to the end of the level of uncertainty, and it's unclear as to when that is going to be, because there's going to be an impact on Brexit, there's going to be a continuing, ongoing, lingering effect of COVID until such time there's a vaccine in place, and at least the vulnerable population within the world as a whole has some level of vaccination on it, even if it's not rolled out to everybody at that stage. So I think that's the reason why there was very little changes in terms of the actual tax rates now at this point in time. But I would be hoping that next year, in order to encourage more activity and stimulus, that they would do something in terms of the CGT rate.
Yeah, and there's probably a lot of assets coming through the marketplace with the exemption from 2013. So there's still the take mightn't be as high as they think it is. We've still no questions not even a question for the bank. I thought we might.
There is a question there. I see if you look in the chat tab, there's one there from Patrick Whelan to all panelists. Are we looking at increases in personal taxes in 2022?
It's hard to know if there's going to be an increase. I would think that they try and resist increases in personal tax on the basis that they will be hoping the level of activity. And I think that's part of the philosophy that they had, that if they don't bring down tax rates now, and when the economy comes back, the natural propensity was that we were going to be looking at a reduction in tax rates, because as the activity gets greater and greater, the tax rates can reduce with the same level of tax take. But I think that they're going to be leaving the tax rate stable for the next number of years, just to try and increase the tax take more than increasing the burden in terms of rates. They're going to hope there's more activity. And naturally, if inflation is going up, or it's not going to go up in the next year or two in any case, but if wage rates, if income goes up and the actual standard rates remain the same, that's effectively a stealth increase in taxes. And I think that's what they're going to do, rather than actually increase rates per se.
Gotcha.
Thanks, John. We have another question in there. POD referenced a number of EU support funds that we hope to leverage. Is this to help support the budget actions announced yesterday, or will there be a future mini budget or further support when these are confirmed?
I think in relation to the whole funds that they've set aside, where it's very loose that they have access to it, is to try and stop a mini budget. They know what the crisis is now. They're in the middle of the crisis. Brexit may give rise to some other issues, but they're tackling the budget as it stands at the moment on the basis of a no-deal Brexit. So they're trying to take account of any future changes. In relation to any mini budget, it is unlikely. The only time a mini budget happens is if there's an absolute shock event that happens subsequent to the budget that they hadn't or weren't able to take account of. So unless something like that happens, I don't envisage a mini budget, because they've left a good bit of kind of scope within the budget itself in terms of stability fund to have the flexibility to access it for various things.
Okay, we have another question in there from Pader. Any changes in BIK?
No, there's been no changes in relation to BIK indicated in the budget at all. There was an issue during the whole COVID period, and it's yet to be fully resolved, but I think it's on the basis that there is no BIK during this period, that if you had a company car, ordinarily you're taxed benefit in kind on that car. And if you think of it, during the COVID period, certainly during the lockdown, and if you weren't able to work thereafter, it would be unfair to have a situation that you are being taxed on a car that is a company car that you have personal use of, where you have a period of time that you have no personal use entitlement at all. So from what we've seen in terms of payroll, in terms of submissions, even though it hasn't been broadcasted, it would appear that during the COVID period, there's no benefit in kind being taxed on individuals. But in terms of this budget itself, there's been no changes in relation to benefit.
Could I ask a question? Just the entrepreneur's relief seems to be still at €1 million if you dispose of your business, whereas in the UK I think it's £10 million. Do you see any potential there for them to jack that up in the next couple of budgets and to drag a bit of business out of the UK?
It's been flagged, but it's also been flagged in the UK that they're bringing down the rate of 10 million. I think it's been flagged that it's going to be reduced to 3 million sterling in the UK. So what I would expect that in Ireland, it'd probably be increased from 1 million to 2 million in order to try and more encourage people to sell businesses on and in order to create some level of transactions. But we had hoped that that would kick in. And again, this is going to be back to the same problem in relation to changes in the CGT rate, the base rate itself, is that it will be seen in some courts as a rich tax. Therefore, it's going to be hard politically to sell it where they're not spreading the benefit to other parties. But it has been flagged in the previous 2 years that there's going to be changes to ER, entrepreneur relief. And I would be hoping that next year they'll have a little bit more certainty in terms of the overall landscape. And at that stage, in order to create transactions with political stability there in having an actual stable government, they may be able to introduce that. Because I believe it would be an actual tax increase to the government if they did it.
Yeah, stimulates a lot of activity.
Yeah,
you would think. Have we another question there, Orla?
No, I don't see anything else here at the moment.
I think we're kind of are we kind of drawn to the end of it all in 45 minutes with no tea and coffee, rasher sausages.
the rashers and sausages will be over at this stage anyway.
Yeah, honestly, God. I think
no, there's nothing else there, Johnny.
Right, no, but we're looking just on behalf of Mullingar Chamber and our members. I'd like to thank AIB, Miles Gillespie for sponsoring this morning. It really helps to have the bank there, and I'm sure Miles can share the slides on what he presented. There's lots of initiatives the banks have that might be worth talking about and exploring for different people and businesses. And apart from that, then just Stephens Cooke, thanks a million for a super presentation as usual. And fingers crossed, we really look forward to 2021 when hopefully we can meet up in person and have the rashers and sausages. Mullingar Chamber are always looking for new members, so please feel free to get in touch. We have lots to offer and we're growing even in the pandemic. So we want to have a strong chamber for a strong town and promote the town as best we can. So please feel free to get in touch if you'd like to join or you know anyone else who'd like to join. I think that concludes this morning's presentation. And thank you very much, Orla, for putting together the technology.
You're very welcome.
And with that,